Welcome back. Someone just placed a $153 million bet on XRP, not a crypto hedge fund, not an anonymous whale clicking buttons in the middle of the night. Goldman Sachs, one of the most powerful investment banks on the planet, quietly built that position, split it across 4 regulated funds, and filed the paperwork with U.S. regulators. It became public in February. And then XRP dropped 40%. So here's the most important question hanging over this entire market right now. Did Goldman Sachs hold that position through the crash, or did they walk away while retail was still buying? The answer does not come until May, and when it does, it will be one of the most significant institutional signals in XRP's history. There is a second paradox running alongside this one. Ripple, the company behind XRP, just posted the best business quarter in its entire history. Payment volume crossed $100 billion. Revenue from its institutional banking arm tripled. The company hit a $50 billion valuation. 3 of Europe's largest financial institutions are now running their cross-border payments on Ripple's network, and XRP, in those same 3 months, dropped 30%. That is the central mystery we are unpacking today. Why is Ripple winning while XRP is losing? What does Goldman's $153 million bet actually signal? And what exactly will we learn in May? And what is the one piece of legislation moving through the U.S. Senate right now that could either unlock $8 per XRP or trap the price below $2 for the rest of 2026? These are the questions that matter, and we have real data to answer them. So let's break it all down. Let me start with Goldman Sachs, because this story has layers most coverage has completely missed. Goldman's mandatory SEC filing revealed 4 separate positions. $39.8 million into the Bitwise XRP fund, $38.4 million into Franklin Templeton, $37.9 million into Grayscale, $35.9 million into 21 shares, near equal allocation across all 4. That structure matters. You don't split a position evenly across 4 competing products by accident. That is not a client liquidity trade. That is a deliberate, distributed institutional build. The scale puts it in context. Goldman's $153.8 million position is larger than the next 29 institutional XRP holders combined, not number 2. Numbers 2 through 30 combined, Bank of America filed the same month. Their position, approximately $200,000 in an XRP ETF. Small in absolute terms, significant in direction, the 2 largest investment banks in America now have declared XRP exposure on their books. Here is what we do not know yet. Goldman's filing reflects Q4 2025 holdings. XRP has dropped 40% since that snapshot. Their Q1 2026 regulatory filing, due in May, answers one question. Was this a long-term conviction bet on XRP's future, or was Goldman simply providing liquidity to clients and moving on? If they held through a 40% drawdown, that is the strongest institutional signal XRP has received from a bulge bracket bank. If they trimmed, the adoption narrative requires a hard recalibration. Running alongside this, the Clarity Act. This is the legislation that would permanently classify XRP as a financial commodity under U.S. law, removing the compliance barriers currently keeping major institutions out of XRP payment corridors. Senate Banking Committee markup is targeted for late April. Galaxy Digital has been explicit. If the bill does not clear committee by end of April, it is likely dead for all of 2026. Ripple CEO Brad Garlinghouse puts passage probability at 80%. Prediction markets sit at 72%. Standard Chartered's Jeffrey Kendrick, global head of digital assets research, projects XRP at $2.80 without the law passing, $8 if it passes. The delta between those 2 outcomes is $5.20 per token. Hold that thought. The on-chain picture shifts everything. 7-spot XRP ETFs are now live in the United States. Launched November 2025. Combined inflows since launch, $1.32 billion. Peak assets under management, $1.65 billion. Current AUM down to approximately 930 million, a 44% decline from peak. Now watch the weekly flow trajectory. At launch, inflows were running 80 to 200 million per week. By the last week of March 2026, that number collapsed to 2.66 million. The week of March 27th, which many had circled as a key catalyst week, posted $28 million in net outflows. That same week, Bitcoin ETFs attracted $767 million in new money. That gap is not a rounding error. It represents institutional capital choosing the safer bet and rotating out of the riskier one. March total, 57 million in net outflows from XRP ETFs. First negative month since launch. One more number that matters, institutional participation in XRP ETFs sits at 16%. In Solana ETFs, that figure is already 49%. 84% of XRP ETF money comes from retail investors using normal brokerage accounts. The institutional base is thin, concentrated almost entirely in Goldman's 153 million. Broadening it requires the regulatory clarity only the Clarity Act provides. Okay, bullish case made. Now let me stress test it. Here's the data point that keeps me from going full bull right now. 60% of circulating XRP supply is held at an average cost basis of $1.44, above today's price of $1.35. Every rally toward $1.44 triggers a wave of break-even selling. That structural ceiling has stopped multiple recovery attempts this year at exactly that price level. It is sell pressure baked into the market's architecture. Large holders have moved 3.8 billion XRP tokens onto Binance since January 2026. In February alone, $652 million worth of XRP in a single week, the largest weekly exchange inflow of 2026. When tokens move onto exchanges at that volume, it signals preparation to sell. Total estimated selling by large holders since the July 2025 peak, $6 billion. All right, that's the data. Now let me tell you what's fighting against it. Here's the force that just erased two of the biggest catalysts in XRP history in 24 hours. It is not Ripple. It is not the SEC. It is not Goldman Sachs. It is a narrow strip of water near Iran, 21 miles wide at its narrowest point, called the Strait of Hormuz. It controls 20% of the world's entire oil supply. Active U.S. military conflict in that region has sent oil above $110 per barrel in March alone, a 40% surge in a single month. That spike is feeding directly into inflation, and inflation keeps the Federal Reserve from cutting rates. High rates are the structural enemy of every risk asset, including XRP. This is the part of the video where I lose the people who only want hopium, but you're still here, so let's go. The Federal Reserve voted 11-1 on March 18th to hold the benchmark rate at 3.5 to 3.75%. Inflation forecast raised from 2.4 to 2.7% for 2026. One rate cut projected for the entire year. Maybe. Then watch this number. Futures markets on March 27th showed a 52% probability of an actual rate hike by year-end. Not a cut, a hike. That crossed 50% for the first time in 2026. Jerome Powell used the phrase energy shock of some size and duration at his press conference. His term as Fed chairman expires May 15th. Kevin Warsh is nominated as his replacement. Powell's final meeting, April 28th and 29th, carries double significance. Last session under current leadership, first real chance to reset expectations before summer. Bitcoin dominance sits near 60%. Altcoin rotations historically begin when that number falls below 50. We are 10 full percentage points away from that threshold. Institutional capital is not rotating between crypto assets, it is leaving crypto entirely. Now here is the contrast the market has to reconcile. Ripple was added to the DTCC clearing directory on March 2nd. The DTCC processes $3.7 quadrillion in securities annually. MasterCard launched a crypto partner program in March. Ripple listed alongside Binance, PayPal, and Circle. Deutsche Bank, Aviva Investors, and Societe Generale are all actively using Ripple's payment infrastructure. Hidden Road, Ripple's prime brokerage arm, acquired for $1.25 billion, now clears for over 300 institutional clients at $3 trillion annually. All of this is real. XRP is trading at $1.35. Fundamentals set the destination. Macro sets the timing. This is the part of every video where I check myself. Because confirmation bias kills portfolios. Ripple the company and XRP the token are legally and financially separate entities. Ripple earns revenue from software licenses, prime brokerage fees, and treasury management tools. Zero of that revenue flows to XRP holders. Zero. The $50 billion valuation accrues entirely to Ripple's private shareholders, not to token holders. When Deutsche Bank processes a cross-border payment on Ripple's network, it settles in dollars and euros, not in XRP. The only Ripple product that creates direct buying pressure on XRP is on-demand liquidity. That product is currently used primarily by Latin American remittance companies, not by the European Tier 1 banks making headlines. Until those institutions adopt on-demand liquidity at real scale using XRP as the actual bridge asset, Ripple's business wins do not mechanically translate into XRP price appreciation. The Clarity Act is the regulatory unlock that makes that transition structurally possible. Think of these levels as ceilings, each one with billions pressing down. First ceiling, $1.40. Average break-even for the underwater portion of the holder base. Sellers cluster here on every rally. Clearing it requires multiple consecutive daily closes above that level on elevated volume. Second ceiling, $1.57. The first genuine technical reversal signal of 2026. Standard Chartered and independent technical desks identify this level as requiring 2 consecutive daily closes above it, with volume at least double the 30-day average, to confirm a real trend change. Clearing 157 activates the $2.80 base case target. Third ceiling, $2. Getting there requires at least one of the following: the Clarity Act passing, Goldman's May filing showing conviction holds, or a material macro shift. Standard Chartered's upside target if Clarity passes, $8 by year end. Below $1.27, danger zone. A daily close below that level confirms a bear pennant structure with a measured downside target near 72 cents. Now the part you came here for. What to do with all this? Signal 1, the Clarity Act Senate Banking Committee markup, late April. Senator Lummis confirmed the timeline in the final week of March. This is the binary event for XRP in 2026. If the bill passes committee, Standard Chartered's $8 institutional target activates, and an estimated $10 billion in new ETF inflows becomes structurally possible. If it stalls, XRP likely stays trapped in a 130 to 150 range for the rest of the year. Galaxy Digital's warning stands, Miss April, and this bill is likely dead until 2027. Senator Moreno issued the same warning. Watch for any Senate announcement on the markup date. A confirmed date is a catalyst. A delay is a signal to reduce expectations. Signal 2. Goldman Sachs Q1 2026 13F filing in mid-May. This is the single most important data point in the XRP institutional story for the second half of 2026. If Goldman held or added to their $153 million position through a 40% drawdown, that is one of the strongest conviction signals any bulge bracket bank has ever sent on a digital asset. If they trimmed, the institutional adoption narrative resets and the ETF inflow story stalls. May answers that question definitively. No other single filing carries more interpretive weight this year. Signal 3. XRP daily close above $1.57 on elevated volume. 2 consecutive days required. That confirmation activates Standard Chartered's $2.80 base case as the near-term objective, roughly double today's price. Signal 4, Federal Reserve, April 28th and 29th meeting, and the April CPI print in mid-April. If CPI surprises to the downside before that meeting, rate cut expectations return and risk assets get relief. If it comes in hot, the rate hike probability rises above 60% and the macro environment deteriorates further. This is Powell's final meeting as chairman. Any signal that September cut remains on the table changes the picture for XRP in the second half. Bullish scenario, clarity. Act clears Senate Banking Committee in late April. Goldman's May filing shows they held or added. Oil retreats below $90 as the Iran situation stabilizes. Fed signals one September cut. Standard Chartered's $8 year-end target becomes the institutional reference point. Bearish scenario. Clarity stalls in committee and does not resurface before 2027. Fed holds or raises rates. Oil stays above 100. XRP trades between 130 and 150 for the rest of the year. You don't need to guess. You just need to watch these signals. So let me bring this all together. Goldman Sachs placed a $153 million bet on XRP, larger than the next 29 institutional holders combined. May reveals whether they held through the crash or walked away. Ripple just had the best business quarter in its history, and XRP dropped 30% in the same period because the mechanism connecting Ripple's revenue to XRP demand is not yet activated at institutional scale. The Clarity Act, moving through the Senate right now, is the regulatory trigger that could change that connection permanently. And the macro backdrop, oil above $110, a Federal Reserve holding rates at 3.75% with a 52% probability of a hike, Bitcoin dominance sitting near 60%, remains the wall standing between where XRP is today and where its fundamentals suggest it could eventually go. I'll be tracking the Senate markup timeline, the Goldman May filing, ETF weekly flows, and the April Fed meeting every day on this channel. Tomorrow, the April Fed meeting is exactly 28 days away. I'll have the latest CPI inflation data, the breakdown of what each number means for the rate cut timeline, and exactly what Jerome Powell would need to signal in his final meeting as chairman to change this picture for XRP. Don't miss it. You're more informed right now than 95% of XRP holders. Use it. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed,